Hi everyone, this is a technical analysis on gold. Let's start with some fundamental background first. The uncertainty around inflation due to another increase in energy prices and the risk of a recession continue to keep gold in a range. In fact, we saw a rally in gold around the end of August as the US data started to surprise to the downside, with the labor market indicators showing weakness, but then the data started to show strength and gold sold off again. Last Friday, we got a rally in gold, which was caused mainly by a technical breakout, as there was no data supporting such a move. Therefore, we can expect gold to erase the gains unless we see weakness in the data. Now, on the daily chart, we can see that gold rallied last Friday, bouncing near the key 1893 support level. The price is now back to a strong resistance, where we should find strong sellers piling in with a defined risk above the resistance to target another sell off into the 1893 support. The buyers will need the price to rise above the 1934 resistance to switch the bias from bearish to bullish. On the 4-hour chart, we can see that we had a divergence here with the MACD as the price was approaching the 1893 support. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, the sellers land on the strong resistance around the 1915 level, where we had the confluence with the trend line, the 50% Fibonacci retracement level, and the previous support to resistance. Once the price broke through the resistance, the sellers folded and the buyers piled in, taking the price quickly into the 1934 resistance zone. On the 1-hour chart, we can see that we have another minor divergence around the resistance as the bullish momentum started to fade. This might even turn into a double top pattern, with the target standing right at the previous resistance, now turned support at 1915 level. In fact, we should see the sellers piling in here to target the 1915 level first and ultimately the 1893 support. The buyers, on the other hand, will want to see the price breaking above the resistance to pile in even more aggressively and target the 1984 level. This week has just a couple of important economic releases, with the FOMC rate decision on Wednesday being the highlight. The Fed is expected to keep rates unchanged, and the market will focus more on the dot plot and Fed Chair Powell's press conference, although he's likely to repeat that they remain data dependent. Moving on to Thursday, we will see another US jobless claims report, while on Friday we conclude the week with the US PMI's data. Although gold remains range bound in the bigger picture, strong data is likely to weigh on the yellow metal, while weak readings should give it a boost.